Ladies and gentlemen, welcome back to the channel. Today is a weird day. AMC stock is down 20%. Ape stock is down 15%. What in the hell is going on here? I think we need to talk because I think there is something very important that you need to know. So that's what we're going to get into here in this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. But first, coffee. Let's go ahead and get straight into it. So, Ape is down 14%. AMC stock is down 20%. I'm not going to lead you on with the suspense. I'm going to just let you know right off the bat. What's happening here is the hedge funds and institutions that invested in Ape, they are starting to sell out of their positions. This arbitrage trade for them is coming to an end. Okay, that's part of what's happening on the Ape side. On the AMC side, you're seeing more shorts heading into the stock. Now, some of this feeds off of each other. A lot of these trading algorithms, when they do one thing to one, they do it to the other as well. So that is also having a role to play. If hedge funds and institutions are selling Ape, then a lot of that selling can translate back into selling of AMC stock solely based off of kind of a trading algorithmic kind of style. So that's what's happening here today, in my personal opinion. Again, institutional investors, hedge funds, they're selling Ape and they're going ahead and they are shorting AMC. So I think once we get the next short interest report, I think it's fair to assume that we're going to see a massive short interest boom in AMC stock. And this dragging down of Ape actually means less dilution for AMC, because keep in mind, these things have to be incorporated. So what you would want it to see is AMC going up and Ape going down. That's obviously not happening today, but it does mean a little bit less actual dilution to the share price, not dilution to equity, but to the share price as Ape does fall. Now, according to Ortex, what is actually causing this drop is that Intera Capital is selling shares of Ape. Intera Capital has been consistently selling Ape for a while, but one of their last transactions was a block sale of about 8 million shares of Ape. So it looks like, again, this arbitrage trade is coming to an end, and the hedge funds and institutions are selling out of Ape, but they're not willing to get rid of their short positions in AMC. It's one of those situations that makes, again, absolutely no sense. In regards to this arbitrage trade, this shouldn't be happening. AMC and Ape both falling like rocks today. The shorts are digging themselves an even deeper grave. And I think the point that you need to remember is that shorts need to cover on short positions. AMC's business fundamentally has been getting better. The markets right now are expecting a lot of dilution right away from AMC. That doesn't make a lot of sense. It's possible, but does not look likely. Okay, so that's something to also consider. Now, let's take a look at some of the data here for AMC stock over on Ortex. And I want to start with the option activity, guys. It's noon. We're only a couple hours into trading, and you're already seeing some massive option trades coming through. If we look at the numbers today, 174 orders totaling $28.87 million with a positive order value of 5%. Some incredibly large numbers that we are already seeing with a positive order value, again, of 5%. This is not a very positive day. So on top of the shorts that are actually taking on new positions, which you can see a lot of shares actually being borrowed today, you're also getting a lot of those synthetic positions as well. Take a look at the Stocko Tracker data. You have never seen this before. 602 calls in the money. 602 calls. 582,000 calls out the money. It's like laughable at this point. Puts in the money. 789,000. Puts out the money at 51,000. You are at the most bearish, extreme bearish levels that you have ever seen with AMC. It's never been this bearish. Now, usually when a stock is, or when we could sit here and say it's never been this bearish, that's typically a sign of a bottom. right? That's typically like, hey, if the company's not going bankrupt, how much worse is it going to get from here? You've massively de-risked on some of that upside premium. So basically right now, the markets are saying, yeah, AMC, there's no way this company's going to do anything good. There's no way the stock's going to go higher based on the short positions, based on what is happening over the last 2 days or so. So by the end of this week, if you can see an upside move in AMC, that's going to be a problem for hedge funds and institutions. Why? Because let me tell you, the out-the-money calls controls about 58 million shares worth of buying pressure, if obviously they all went into the money. But even if half of them went into the money, that's going to be roughly 28 million shares that would need to be bought by the market makers, aka 28 million shares that are 28 million to 58 million that are sold short currently by the market makers. And the puts, in the money puts, 789,000. If half of those went out the money, just round up to 800,000, you're going to have 80 million shares that market makers would have to buy. If half of those went out of the money, which I wouldn't count on, but if that did happen, if we do get a bullish reaction on Thursday and Friday, well, that would be about 40 million shares that market makers would have to buy. Again, these numbers that I'm throwing out are current shorts that market makers have on AMC stock. As these options do go into the money, on the put side, market makers have to short stock. So this right now is 79 million shares that are already sold short by the market makers on the put side. And yeah, not a lot of buys from the market makers on the call side. So if you think about it in terms of that, you can get some very dramatic moves by the end of this week, given how bearish you are. You're just too bearish. I don't care if you're bearish about the reverse split and what comes after that. You are way too bearish heading into it. Now, here is what B. Riley Securities said on Monday. So B. Riley Securities analyst Eric Wold wrote in a research note Monday that investors were focused on, quote, the dilution that could come from potential post-transaction equity offerings. However, AMC shares climbed by about 20% that week. Wold said he believes that the stock move could indicate that investors are beginning to look beyond any potential near-term dilution and instead focus on the opportunity for the company to utilize the access to incremental equity to both materially reduce debt and strategically expand into higher growth sectors through acquisitions. Yeah, doesn't look like any of that is happening here today. And B. Riley Securities just said that yesterday. I mean, so when you think about these things with that kind of logic, with that overarching mind frame, why is this happening today? It's a massive shorting attack. AMC stock is at $2.48 per share. It's down 64 cents today, down 20.5%. Why is APE down 14.3% over the last 2 days as well? Has gotten absolutely destroyed. Again, this was not in the cards. This shouldn't have happened. And APE is down like over 21% within the last 2 days. This is not what you would have expected to see. So I think that means one ultimate thing. After the reverse split, you're much more likely to rally now than maybe you were, back here, right? Back here, when you started to recover. You are just at an ultra low, artificially suppressed price that I don't see any other outcome besides a rally after the reverse split. I don't think you sell off yesterday 24%. You sell off 20% today, and AMC stock continues to sell off after the reverse split. I'm actually going out and buying some calls today. So if you guys want to come trade with me live in real time every time I make a trade, link down below in the description of this video as well. We have a lot of great members over there that source their trades, source their opinions, source the news. Keep you guys up to speed and informed. If you guys would like to come trade with us, come ask questions, come learn, link down below again in the description of this video. Now let's take a look at the numbers over here on Ortex. And again, guys, I'm expecting the short interest could reach as high as 40% on the next exchange reported short interest number. So don't be surprised when that happens, right? I don't think you guys would be after the last 2 days of selling, but don't be surprised if it does. Short interest of free float. You got 27.79%. And this says it's updated Tuesday data as per the previous close. So we don't have the actual numbers for today. It looks like, hold on, actually, let's see. Yeah, same story with the live short interest. And Ortex is in a new beta program, so they're adding a lot of features. So it's a little bit different when we look at it. But 27.79% estimated short interest are free float. 447.66 million shares that are currently sold short. Days to cover 4.55. 143.48 million shares that are currently sold short. Shares out on loan 203 million. Cost to borrow 323.51%, trailing 3-month average. 99.27% utilization. So at this point, basically all of the shares that are available have been lent out, and it's very hard to get your hands on shares at this point to sell short in AMC. Now, short score of 90.93 out of 100. So very, very high over here as well. And I do want to highlight the cost to borrow fees that you are continuing to see. If you look at the cost to borrow numbers today, let's go ahead and take a look. Interactive Brokers had about 900% last we knew. It does not look like we're getting any new fresh updates as of right now. So that is a little unfortunate. Yesterday's numbers were at about 1,000%. Today, it's looking like cost to borrow minimum at 8.6%. You don't have a number for cost to borrow average. Cost to borrow max is saying 8.6%, but these numbers just have not updated. That is the problem. So, cost to borrow fees over 1,000%. That's what we have seen over the last couple of days. That's where we're still at. This means that even though, which is hard to even quantify in your brain, even though yesterday you fell 24%, today you're falling 20%, hedge funds are still unprofitable on the average of short positions because these cost to borrow fees have been, 2.8, almost 3% every single day for months. It's not a good situation to be in if you're a hedge fund, an institution. I think that's another big reason why coming after the reverse split, you're actually likely to get a lot more upside rather than downside. Okay, I think that's pretty straightforward. Now, if we look at the FTD situation, the FTDs have also spiked recently after the judge gave its final ruling. So what you've been seeing is the low of 6.8 million FTDs. Back here, these will come due on August 31st, and then you ramp back up to about 7.7 million, almost close to 8 million FTDs, and those will come due by September 4th. So I do imagine there's probably going to be a lot more FTDs that do come due as well once we get further weeks of data. But as far as today, it's looking like about 12 million FTDs. Tomorrow, about 11.1 million FTDs. On Thursday, 12 million, and on Friday, another 12.1 million. So some very high FTD numbers as well. Now, just taking a look at the charts, I mean, we have not been at these prices in a very long time, right? You're getting back to levels that you were at before January of 2021, okay? Some extremely oversold price action. Don't be surprised when the stock does rally after the reverse split. Don't be surprised, especially if we don't get dilution that same day. Because AMC could come out and they could nuke the stock if they wanted to. And I think that is part of why AMC has been falling the last 2 days, is investors kind of go back and forth saying, hey, are we going to get dilution? Are we not? Are we going to? It's just a back and forth game with a lot of those options definitely playing this exacerbated role how AMC is trading every single day, guys. So not really a cause for concern, in my personal opinion. It does de-risk any potential downside after the reverse split based on the last 2 days that we have seen. But it's simply the arbitrage trade getting closed out on the ape side that is definitely having an effect on AMC. But again, more shorts are just shorting AMC. So it's kind of the reverse of the arbitrage trade, just going back to normal, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Let me know what you think is causing this big down move for AMC as well as Ape shares today. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.